Last year, all the investors, banks and hedge funds couldn't stop talking about gold. There was a lot of optimism, a lot of predictions, and most of them did not materialize. However, we still have historically high inflation in the UK, Germany, the US, and, to be honest, most countries around the world. A lot of the reasons why investors were bullish on gold are still around. We still have geopolitical uncertainty. We still have a possible global recession incoming. We still have lots of shortages and supply deficits, although they are easing up a bit. Basically, this makes me wonder, is it still worth buying gold in 2023? Where is the gold price likely to go? Obviously, there's a few scenarios, but before we go into that, let's look at how gold performed in 2022. Quick answer, it didn't do anything. Gold prices opened the year at $1,828 and finished at $1,822.8, a decrease of 0.3%. Gold prices were volatile, initially establishing a new all-time high at $2,070.4 in March before the first Federal Reserve decision to raise rates. As the Federal Reserve kept on raising interest rates, gold prices went down to a low of $1,614, breaking the pre-pandemic support of around $1,700 and establishing a low before rallying back up, breaking its 200-day SMA and ending the year at $1,822.8. If you saw my last video on gold prices, my personal opinion was that in the worst case scenario, we could see lows of around $1,680, and we did. Goldman Sachs' prediction of $2,500 did not even come close, and that should tell you all you need to know about investment banking price forecasts. They are about as reliable as weather forecasts. Speaking of reliability, a lot of retail investors criticized gold in 2022 for being an unreliable inflation hedge, but just compare gold's performance to stocks. Gold was down 0.3% for the year, whereas the S&P was down 20.4%, so gold definitely did its job as a hedge. Obviously, it returned less than inflation, but in all honesty, the reason why the price of gold was this high in 2021 and 2022 was precisely because investors were expecting inflation. Once we actually saw inflation and the Fed started implementing measures, investors started cashing out their bets and the gold price went down. In terms of inflation in 2023, the consensus seems to be that we have reached the peak for the current inflation levels, and it really shouldn't be a problem going forward. In fact, some economists are speculating that we even may see deflation by the end of the year. Whether that's gonna happen, I have no idea. I can see some possibility of deflation, especially since gas and overall energy prices have dropped a lot. However, my point here is that inflation will definitely be going down, and it likely won't be a major bullish factor for gold, at least in 2023. It is worth mentioning that a lot of economists, banks and investors expect that we may see a bounce back in inflation come 2024. A recession is also becoming increasingly likely in 2023, and I've actually covered that in one of my January videos. Historically, gold does well during recessions, so if we get to that point, we may see a bullish scenario unfold in the gold market. Now, since the start of 2023, gold moved from $1,822.8 to a high of $1,960 before dropping sharply down to $1,864.9, which is the latest price as of today, 3rd of February. So, what can we expect to happen by the end of the year? Well, there are a few key factors that will play a part in gold's price in my opinion. First of all, we have the federal interest rates sitting at 4.75%. Currently, they are expected to hit a high of about 5.25% to 5.5%, somewhere around July, then stay there until at least November, maybe later. Some economists say that gold and interest rates are negatively correlated, meaning that when interest rates go up, gold goes down. The logic here is that higher rates result in a stronger dollar, and a stronger dollar results in cheaper gold, since gold is mainly traded in dollars. Plus, this also means that it is easier for investors to get a higher yield on essentially risk-free investments, like US Treasuries, meaning that more money flows into these assets and out of riskier assets like stocks and gold. However, recent analysis of the World Gold Council of this relationship showed that in the 4 latest tightening cycles between 1994 and 2015, gold actually rose after interest rates started increasing. A year after interest rate hikes started, the median gold return was 7.5% compared to US stocks at 6% and US dollar at 2%. If we look at previous interest rate cycles in the 70s and 80s, gold prices actually had a very strong positive correlation with interest rates. While rates jumped from 3.5% to as high as 16%, gold went from under $50 to almost $850 per ounce. If we take a look at the last half century since 1970, the correlation between interest rates and gold is actually just 28% according to Investopedia, so it is definitely not significant. Of course, that begs the question, if gold prices are not driven by interest rate changes, then what actually drives them? One argument is that the prices are driven a lot more by supply and demand, which makes sense given that gold is a commodity after all. Obviously, gold is a very specific type of commodity, mainly because it has a very small industrial use. In fact, only about 308.5 tons of gold were used in the industry during 2022. Given that the total gold demand that year jumped 18% to a record-breaking 4,742 tons, the industrial use of gold only accounted for 6.4% of total demand. Instead, demand for gold bars and coins jumped to 1,218 tons, the highest level since 2013. Central banks and other institutions also bought a record 1,136 net tons of gold. I personally think that the spike in central bank purchases is really intriguing and something to keep an eye on, because that was the highest level since 1967, when the US was still on the gold standard, and gold was just under $40 per ounce. We could be witnessing some fundamental gold market changes here, but it's hard to exactly say what they are. According to the World Gold Council, the biggest buyers of gold were the central banks of countries considered to be emerging markets, like Turkey, Egypt, China, Qatar, and so on. Turkey was actually the biggest buyer with an estimated 394 tons of gold bought, and that could be because of two reasons. One is obviously Turkey's massive inflation, which reached 85.5% in October, but another is the rumor that Turkey is trying to establish itself as a much bigger player on the world market. That's a whole different topic for another video, but the point here is that there could be some new players when it comes to the global gold markets, and it is worth monitoring what happens in the next couple of quarters. In terms of gold supply, the total amount was 4,754.5 tons, only 12.5 tons above total demand. Mining accounted for 3,611.9 tons, or about 76% of total supply, which was slightly below the peak in 2018 of 3,655.3 tons. The rest of the supply was made of gold recycling, a massive 1,144.1 tons, which is 30% less than the peak in 2009 of 1,728 tons. The main thing here though is that there is no forecasted supply mismatch in the coming months or years, so when it comes to supply and demand, there really isn't any massive bullish or bearish price pressure. So, we have looked at factors affecting gold price like inflation, interest rates, supply and demand, possible recession. What does this all mean in terms of gold prices? Well, it can be hard to tell. I have looked at a lot of different gold price predictions and forecasts, and they all remain bullish. My main problem with these is that they are always bullish. I can see why we have these die-hard gold bugs who are simply always bullish on gold, but the reality is that gold prices don't match their expectations. As much as I appreciate their analysis, I simply don't find their price targets reliable. For example, we have targets ranging from reasonable prices like $2,100 and $2,200 to highs of $3,000 by the end of the year. To me, 3,000 is simply impossible, or at least very unlikely. I do think it is possible for gold prices to break the previous all-time high of $2,070 per ounce, maybe going to the vicinity of $2,130 in the best case scenario. Actually, mainstream banks expect a similar price high of about $2,150. Looking at the worst case scenario, the absolute bottom for gold prices is just under $1,300, which is the average all-in sustaining cost for the industry. At that point, most gold producers will be running at a loss. In fact, the 90th percentile for all-in sustaining costs stands at above $1,650 per ounce, which means that, at least in my eyes, the range between $1,600 and $1,650 offers a very strong support. This is also shown in the charts as gold prices hit that range 3 times in 2022 before bouncing back. Now, in terms of important levels of support and resistance, I would say that the latest support level stands at roughly $1,800. Currently, the 200-day average stands at $1,775, so I would say the range between $1,775 and $1,800 can serve as a strong first support level. In terms of resistance, the range of $1,950 and $1,975 provide the current biggest resistance. Finally, looking at average prices throughout the year, mainstream banks put their average price expectation at somewhere around $1,831, a decrease in current gold prices. That average price sounds reasonable, if not a bit pessimistic to me, but I think the likelihood of seeing that is high enough. To summarize, I think we're looking at prices ranging between $1,600 in the worst case scenario to somewhere near $2,130 in the best case scenario. Given the current gold price of $1,864.9, I don't think we have a good enough risk-reward ratio to justify opening short to medium-term trades. Having said that, if you just want to accumulate gold, the current price is actually decent. It may be worth waiting a couple of weeks to see if gold prices will fall down to the $1,800 support level that I am seeing, because it will simply offer you a better deal. Personally, I am a long-term gold investor and use it mainly as a way to balance my portfolio, so I think I will continue doing my weekly purchases for the time being. So, these are my expectations about gold prices in 2023. What do you think? Let me know in the comments below. If you enjoyed the video, please leave a like, subscribe and share it with anyone who may be interested. Thank you for watching and I will talk to you again soon.